announced today is Friday 11 April 2025. Alright, you can tell me about the news that could affect the market.
Sorry, I'm having issues right now. Our systems are experiencing heavy load. Please try again later.
Alright, anyway, we go
Great.
to
What's up?
we followed the yesterday's story that I'm my trade went well, and
It
I learned
sounds like you're
something.
picking up from where we left off. Can you remind me what part of the story we were following?
I sell Swiss franc yesterday. Oh, I have to do something. Okay, I sell Swiss franc yesterday. It went good. Not New Zealand Swiss franc yesterday. It went very well, and I used the demo. I want to use the demo, another strategy that I try to have the 200 euro to start with, and I will go with one lot size and trying to see if I can make something out of 200 without wiping out such a big lot. One hit, do or die, like that. That's the experimenting. Now the market is open. US Swiss franc drop like hell because dollars falling. Okay, let's see the intention of the market. If the buyer means to go push the price down according to the news, we wait for the pullback to get in on US Swiss franc or any one of them that looks good on window shopping. And my trade New Zealand, oh, went well. Oh, I make something more on the New Zealand Swiss franc. And look at that. I will mark approximately where I was in yesterday. Let's see. All right. Are you there? I went in somewhere around here.
Got it. Are you referring to a trade or a part of your strategy you were working on?
Oh. Yeah, I just tried to put a second
It
leg.
sounds like you're sorting through something. Want to talk it through? Maybe we can figure it out together.
Alright, today is the test of 200 euro to go in with one big lot size.
It sounds like you're setting a target or making a test trade with 200 euro today.
Yeah.
Is it part of your strategy to see how the market responds with this amount?
Yes, because I have such a small account, and I want to make sure that when I get in it's run, and it's run good, and make my 200 euro piling up.
That makes sense. With a smaller account, it's important to be careful and strategic. Focusing on winning with consistency is key, especially when you're building that account. Do you have a specific setup or level you're eyeing for this trade today?
Today, I'm following up with the Swiss franc.
Got it. So today's the day. Are you waiting for a particular setup or level to line up before you enter? How are you planning to approach it?
I'm going to 1 minute time frame, and I'm going into
Going for
speculation.
quick moves on the 1 minute time frame. That's intense, but can be rewarding with the right strategy. Are you planning to trade based on a specific pattern or key level you're watching on that time frame?
Yes, I looking for market opening, strong power forceful behind the back with the news event. See the intentions after the big player design and wait for the things to pull back and get in. Right now I'm watching mode.
That's a solid approach. Watching for the market opening with strong momentum and confirming intentions from the big players is a great way to catch moves early. Waiting for a pullback to get in is smart, especially if you're looking for confirmation before entering. Are you tracking any particular news events right now?
I was looking the news. Yeah.
Events or data releases you're focusing on today?
The news event, just let me get there first, and I will show on the screen. Alright, this is new. New Zealand was good, positive effect on business. New Zealand PMI, and is negative. Sorry, this one is
Got it. So the positive effect from the New Zealand PMI is something you're watching closely. That could definitely have an impact on the NZD. Are you thinking about trading NZD pairs or watching how this affects the broader market?
But I was reading wrong. Previous was higher than the actual. The New Zealand PMI was not positive, and then the GBP is positive. Today GBP is going on well with the news. Positive news is on GDP and on industrial production, and manufacturing production is green. So positive news, the first three, and GDP also change in February, positive 0.2 to 0.8. So that GBP. Only the trade balance is bad. Trade balance is minus 18 to minus 20. That's negative. That's really negative. I don't know what it will affect to the market. This announced 1 hour before the London Open. Trade balance of GDP is minus 7.3 and to the minus 8.5. So it's negative. So this can be effect to the GBP. We watch eye on the GBP and New Zealand today, and Swiss franc also. Consumer consumer climate.
It sounds like there's a mix of positive and negative news around New Zealand today. The strong GDP growth and positive industrial and manufacturing production are solid, but the trade balance being negative could definitely weigh on sentiment. Since the GDP is positive and was revised higher, it could still give the NZD some support, though the trade balance could counter that. With the news coming out an hour before the London Open, it could create volatility. You'll want to keep an eye on how the market reacts once the news is priced in, especially with such a big shift in the GDP. Are you planning to trade based on the reaction to the GDP, or are you waiting for more clarity once the market opens?
Today I will be busy for another 2 or 3 hours. I cannot jeopardize my technique, my plan, my strategy for 200 to be blow away if I don't sit tight and quick in and out scalping. So I'm just gonna watching the news, and the 1 hour from now it's just open. The market just opened. The big players just come to the office and they haven't decided yet, unless the chart is showing me the price is started moving now. US dollar start to drop. US Swiss franc is dropping, looking like it moving back to the support where it was. So the pullback is quite deep, and looking for correlation to another cat, Swiss franc, euro, GBP, and so on. And as I looking for correlate, and looking one is see the big player detention to go in that one direction, then I need to pull back just a bit to get in. That's my plan. I will watch the chart closely, and maybe in New York I will have free hands to babysit.
It sounds like you've got a clear plan and you're being disciplined, which is key, especially when you're working with a smaller account. Watching for those correlations and waiting for the pullback to get in shows that you're being patient and strategic. Keeping an eye on the USD movement, especially with the potential pullback, is smart, as it could set the stage for the next move. Since you're waiting for confirmation from the chart, especially with the big players still figuring things out, it's a good call to stay on the sidelines until you see clear direction. The key will be spotting that pullback and entering when the momentum seems aligned. Is there a specific currency pair you're most focused on for this?
My trading pair already run it is New Zealand Swiss franc. I have to keep that eye on. I trailing stop loss to lock in profit for one leg down already since yesterday. The leg the pullback last night. I will show you. I'm on 1 minute. I should go to 15 minutes to see more clearly picture. So I put my position at the first leg that break out from the range, and then put in the second leg or the first leg after break the range up there. I count it second time of pushing down, okay, and then they come back 80% or 90% back to the guy who started. So they pull back the first test, pull back only 20%. Dash moving up to the north, bridge it above the selling, just about the same size of the range that they break out from, but structuring small green candle, only few red. But after they get out to the same size of the range, they pulling back with the red and pounding, put the channeling down.
It sounds like you've been tracking some solid price action on the New Zealand Swiss franc pair. The first leg breakout from the range, followed by the second leg, and then the pullback to 80 to 90% of that leg, gives you a clear structure to trade from. That pullback to the guy who started sounds like a good spot to watch for potential continuation if the momentum holds. Using trailing stop loss to lock in profits from the first leg down is a good move since it protects against the pullback without getting stopped out prematurely. Watching for those small candles and the size of the range helps you gauge if price is consolidating or about to make a move. With the pullback to the 80 to 90% zone, it seems like you're positioning yourself for the next push if the price respects the support or resistance at that level. Are you still looking for confirmation from the 15-minute chart before making any adjustments? Or are you actively managing the position on the 1-minute chart for tighter control?
I'm still in the money. I for this first leg, first position that I am in. So this is the second chance that I can put the second leg in, and I'm in at 1,600 now. Even my need glasses. About that anyway. I'm green on the other account, new account. I want to set in 200 for the test if I could do that, and I will exciting to find a good result, but I have to trade it really good. But today I'm very busy. Today also half day be not able to sit tight with the screen. Anyway, we go on, look at this chart now, and the price pull back at the Asian market. New Zealand be able to pull back to the 50% inside of what I call inside the leg, the second leg area, pulling in deep 50% in is like, and then drop to the range, to the support of the range, and they are fighting. The way they're creeping up is they're trying to make a channeling up, but they cannot do the channeling up because it's the ceiling of the seller waiting at the bottom of the previous range. You see, 50% back, pulling back, and create another range right on top of the guy who's starting it. From the buyer, they are waiting. They are right at no man's land or money spot or sweet spot. Somebody has to do something to decide. And my my MACD is telling something like the price is trying to go down.
It sounds like you're in a solid position with your first leg and still managing the trade carefully. The second chance to enter, especially with the price pulling back to that 50% zone, gives you a good potential entry point, especially since it's right inside the second leg up, but getting blocked by the sellers indicates a potential decision point. The range you're describing, where the price is in no man's land, is crucial. If it can't break through the seller's ceiling, the market could either range more or reverse. You're right to be patient here and wait for the bigger players to make their move, especially since you can't be glued to the screen with a busy day ahead. Since you're already in the money on the first leg and looking to manage the second leg, it sounds like your strategy is working, especially if you're staying flexible and waiting for the market to show clear direction. Are you thinking of scaling into the second position once it breaks certain levels, or are you just watching for confirmation that it holds the range?
I set in my take profit already way down here at right under the super trend green line, where underneath the guy who's starting it, the next range lower side of the next range, which is where is the next issue will come. And I'm looking now, enough for this. I think they fight, and I want to look for correlation now.
That makes sense. Setting your take profit just below the super trend green line, where price may hit the next support level in the range, seems like a solid exit strategy. If the price breaks under that line, it could signal the next leg down, giving you a good opportunity to capture the move. By positioning your take profit in the next range, you're giving yourself room to let the trade play out while managing the risk. It sounds like you're carefully observing the levels and waiting for price to reach the key area before considering any further moves. Is the super trend line acting as your main guide for identifying potential support or resistance, or are you using additional indicators to confirm that next potential move?
This super trend line is the next issue level that I think, because it was a range there. Let's go to 15 minutes to see better clear view picture. It was a range that they were fighting, and it was a lowest price on the weekly. Let's see, it was the ever low price on the monthly as well, and it is the trend down for the monthly, who just break out from this support, and they're just trying to kill the guy who pulled back to the support for the first time, and then buyer fell to maintain, to get through or back into the support, or the selling. They become their selling now. So the seller pushed back, and they got this long big red candle, ultra red. For me it's very high, long red monthly candles. That's incredible. That means the price not yet shows a sign of
You're
stop.
looking at a significant
It just
level
break
then,
out.
especially with the super trend line aligning with the lowest price on the weekly and monthly charts. The fact that it's a breakout from support on the monthly time frame and that the buyers failed to maintain momentum makes it an interesting setup for the sellers to take control. The long big red candle you're seeing is crucial, especially since it indicates strong selling pressure. This could be a sign that the market is shifting, with the sellers pushing hard, likely to test deeper support levels. If this is the lowest point on the monthly chart, you're potentially seeing a major point of reversal or continuation after a failed attempt from the buyers. With your focus on that ultra red candle, it seems like you're waiting for confirmation of a downtrend continuation where the sellers are likely to dominate. Are you planning to hold through any potential volatility here, or adjusting your stops as it tests these key levels?
For me, right now to get in is a little bit too late because it's already run and the markets at the market opening, everyone in the chart correlate drop down hill except the Swiss franc JPY, which is go another direction, which show that Swiss franc is strong on more than Japanese yen. But the other pair is like US, CAD, Euro, and Aussie, New Zealand, GBP drop. That means Swiss franc strong to make those guys drop down. Maybe they want to push it down. They don't wait for pullback for 50% on those monthly and weekly. They are greed. They just push the thing down. I don't know why. Normally the big player, they don't.
It sounds like you're in a very observant mode, recognizing that the market has already moved significantly at the opening. With the Swiss franc showing strength against the yen, and the other pairs like the USD, CAD, Euro, and GBP also dropping, you're seeing a clear strength in the Swiss franc. It seems like you're leaning towards the idea that the Swiss franc is driving this movement lower, potentially continuing to push down without waiting for a deeper pullback to those key monthly and weekly levels. Given the price action already in motion, it's understandable that you're cautious about entering now. Chasing the move after it's already started can be risky, especially with the strong momentum behind it. It's smart to let the market settle into a more favorable price action or wait for a better pullback if you're looking to get in. Are you considering watching for a pullback to those key levels before looking for a new entry? Or are you waiting for a clear sign of further downside momentum?
I am busy right now to pull the trigger, or I will be fail. I'm waiting for the pullback, and I'm looking.
It sounds like you're in the thick of it and need to focus on the moment to make your decision. With everything moving so quickly, it's important to stay calm and wait for the best opportunity to pull the trigger. It can be tough when you're juggling other things and the market is moving fast, but trusting your analysis and being patient will serve you well. If you're feeling like it's a bit too late to enter now, watching for signs of a pullback or a clearer setup may be the better option, especially considering your strategy of entering at the right time. If you do decide to act, just ensure you have your stops in place and are clear on where you want to exit. Let me know how it's going when you can.
Right now I want to jump in to put a buy position, but that
sounds like you're ready to pull the trigger. If you're jumping in now, just be sure you're clear on where to set your stops and targets, especially since the market has already made a move. Staying disciplined with your risk management will help you lock in any potential gains without overexposing yourself. Are you aiming for a quick entry with a tight stop, or are you looking to ride the move longer if it continues in your favor?
I will put my alert line, so they call me.
Setting an alert line is a smart move. It'll help you stay on top of price action without needing to constantly monitor the chart. You'll get notified when the price hits that key level, allowing you to make a more informed decision on whether to enter or adjust your strategy. Where are you placing the alert line? At a key level of support, resistance, or perhaps a price point you're watching for a potential pullback?
I put 50% back inside of this leg, from where the top to the bottom where they're turning around.
That's a great place to set your alert, at the 50% retracement inside the leg. It's a commonly watched level, especially when price pulls back after a move, and can often provide a solid entry point if the market shows confirmation. You're positioning yourself well to react if price hits that level and starts to show signs of continuing in your preferred direction. Once the alert hits, do you have any specific criteria for confirmation before entering, like candle patterns or momentum shifts?
the alert, I would do every pair at the same level that they could cause an issue to fight back. And that's when every ring the bell, ding 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 ding, that
It
means I
sounds like
know.
you're setting a key level that could trigger action across multiple pairs, which is a solid, something that could indicate a strong fight between buyers and sellers. This can help you identify when there's a real shift in market dynamics. Are you specifically looking for a particular type of market reaction or pattern across these pairs when the alert goes off, like a wick or candle formation? Or do you just wait for the price to show a clear direction once it hits that level?
Once that hit that level, I have to look again which pair is most likely less issue, no, not so much mess. So I can pick that by looking at every pair across the board, like window shopping.
That makes a lot of sense. By checking all the pairs once your alert goes off, you can assess which one has the clearest setup with the least amount of noise. It's like window shopping. You're scanning the options and choosing the one with the most promising potential without getting caught in the messier pairs that might be too volatile or uncertain. Looking for the pair with the cleanest chart and least resistance at that level will give you a more favorable entry. Do you prioritize certain pairs for this, like the Swiss franc or yen, or do you check everything on your radar?
I just put every alert line on every pair, and let's see if they ring the bell at the same time. And when they do that, I know that
That's a great strategy. By setting alerts on every pair, you'll have a broad view of the market and be ready to act when multiple pairs hit the same key level. If they all trigger at once, it could signal a significant moment in the market, giving you more confidence to make your move. It also helps you stay flexible, as you can choose the pair with the clearest setup at that time. It's like having multiple options, which can be key to finding the best trade. Do you plan to adjust your strategy based on how the pairs behave once the alerts ring, or will you stick to your usual method for entry?
once the alert ring, if I have time, my hands free, I'll take the trade. If not, I have to stay on the sideline, wait until I have really time to glue with the screen, because that moment I'm a hit and run soldier.
That's a solid approach, taking advantage of the alert when you have the time and being disciplined enough to stay on the sidelines when you're busy. The hit and run mindset works well for scalping, where quick decisions and entries are crucial. If you don't have the time to monitor the market closely, staying out is often the best choice to avoid rushing into a trade. Being strategic with your time and entries means you're focused on quality trades when you're in position to manage them properly. It sounds like you've got a good balance between being alert for opportunities and being disciplined with your time management. Hope you catch a good setup when your alerts hit. Let me know how it plays out.
Only switch from JPY that I don't think I will mess around with this, but I have to take a look for what happened. Is look in 1
It's
hour.
smart to be cautious with the JPY pairs, especially if you're not feeling confident about them right now. Keeping an eye on them without diving in fully is a good way to stay aware of potential moves. But you don't have to force a trade if it doesn't align with your strategy or if the conditions aren't right. Just being aware of the price action there could help you spot any sudden shifts, though. It's always good to stay informed, even if you're not actively trading that pair. Are you watching any specific JPY pair or just keeping tabs on all of them for now?
I'm on Swiss franc, but I apparently in Swiss franc they have Swiss franc JPY in there, and I just have a short brief look on this, and I'm at the weekly now. Swiss franc JPY is at the edge of pulling back for the first touch on the top side of the latest range. Are they gonna respect this level to maintain the ground up above there, or are they gonna penetrate through this a little bit more to the middle inside of the latest range, lower from there, from, the last one inside? That means you a little poke through this guy who's starting it, start to get through the lower side of the range where is the last frontier where the buyer need to put up with the fight. This area have the super trend line on, and that was the green line, so it's a support from the seller who want to penetrate through this guy who's starting it. This is the best price at what is called 50% after they move away from the last range. They move away with approximately almost a little bit more than the size box that the last range that they break through. So they create a body of very extreme move up, high tempo, momentum. So they pull back this much of 50% is good price for the buyer to think, okay, we can accept this discount price. We might fight back at this level. So this is the crucial for Swiss franc and JPY. I need to see more on this time frame weekly to see how many leg, how many time.
It sounds like you're looking at a key support level for the Swiss franc JPY pair. The 50% pullback from the recent range creates a potential discount area for buyers. And you're watching closely to see if the sellers can break through or if the buyers will defend and push it higher. The super trend line, acting as support, adds weight to this level, making it a crucial point to watch. You're right to focus on this because it's a moment of decision. Buyers need to step in and show strength, or the sellers could force a deeper move into the range. If the price respects the level, it could signal a bounce and a continuation higher. If it breaks through, then the market might shift its direction, making the lower end of the range the next target. It seems like you're watching this closely for any signs of either buyer defense or seller penetration. Do you have any specific entry signals you're waiting for, or are you just observing how it reacts in the next few candles?
There's not far away from the next support of the super trend line, which is calculate where the price must stop here for test. And for those, they have already showed the green doji with the wick on the bottom for the last week candles, the latest candle. Today it will be closed, and that will be the show sign, because it's crusted like another range on this area. Both red and green fighting, both have wick on top, but the red color has the bigger size of the candle, and it's pulled back for the first test. If there is the seller market, let's say subset of this, if the seller is test V formation, they not break out the guy who started yet, but they are come 50% to test challenge the guy who started down there, and they respond small green candle, and then let the red overdrive almost, but they never get through this support. And below that is the super trend green line waiting for, and a little bit below that is the wick of the green candle where the guy who started, who responsible for this move north, they has to test him. He has to show up with something at the super trend line see his defense on this. He interesting at this price to move it up north, or at least maintain the ground to waiting for the next news event from the New York. That's a lot of New York's news coming, and people are waiting there too. But this is the weekly candle is green with the wick on the bottom and push it up at the level now. Otherwise it will move further down to reach the maximum point where the super trend line has to be bridged. Otherwise,
it seems like you've set your sights on a very pivotal point where the market is showing mixed signals. The green doji with a wick on the bottom from the last weekly candle indicates indecision, but the fact that it's holding above key support levels, like the super trend line, gives it some potential for a bounce. The red candle with the larger size might indicate some selling pressure, but it hasn't yet managed to break the key support level, suggesting that the sellers are struggling. If the price holds around this area and doesn't breach the support, it would suggest that the buyers are still in control, or at least maintaining the ground, as you mentioned. However, if the sellers manage to break through the support, and especially if the super trend green line is breached, it could trigger a deeper move down. The fact that you're looking at this in relation to upcoming news events in New York makes sense, as this could be a decisive point for the pair. The market might wait for that extra push from news to either confirm the buyer's defense or give the sellers the opportunity to drive the price lower. It seems like you're waiting for some confirmation from the market on this key level. Do you plan to enter only if the price starts showing strength from this support, or are you prepared to react if it breaks and heads towards the next level of support?
For me, it's the weekend. Yeah, today is Friday. 2 days before, on Tuesday, I thought Tuesday was my Friday, but actually I confused the day. But today really the Friday, and the Friday the market is closing, and people have to make the in and out quickly. They don't want to put something floating dangerous over the weekend. So I don't know what to do. I have 200 euro to test my things, but I would do that. I mean, to spend that 200 to test on my strategy, I would do it on the New York. After the New York move for a while, see the intention of the big guys, and then when I see that, I wait for the pullback, and then I set in my scalp technique. Sit tight, glue to the screen, and hit and run. That's my plan for today.
It sounds like you have a solid plan in place for today, especially with the weekend coming up. Since it's Friday and the market tends to get more volatile, you're right to be cautious about holding positions overnight. Testing your strategy with the 200 euros on New York's session seems like a smart move, giving you the chance to see how the big players are reacting once the market opens and how the price moves after that. You're focusing on the pullback, which is key, as you mentioned, and applying your scalping technique once the market shows a clear intention from the larger players. Staying glued to the screen and executing quick trades is a good approach to mitigate risks, especially on Fridays when things can change rapidly. Just make sure to stay disciplined with your strategy, especially when you're testing it out with real money. It's all about being patient, waiting for the right opportunities, and not letting FOMO take over. Do you have any specific pairs or setups you're watching for this New York session?
Oh, I was read the wrong chart. It was Bitcoin. Was I reading on? Anyway, Bitcoin also good to know what its movement is for the weekend. I have time on the weekend to play around with Bitcoin because the cryptos open on for the weekend. So anyway, it was Bitcoin. Let's check my pair. What was that? New Zealand Swiss franc. Yeah, New Zealand Swiss franc creeping up, trying to reach to 60%. A guy who's starting it of the seller waiting for smash this thing down, and my alert is right at there, but I prefer to move my alerts line a little bit higher, because most of the time when I think that is the place that should be, but it was not. It's always move, penetrate further from where I was expect, and then I move it a little bit further to put it right behind the guy who's starting it, the first guy, where they pull back 50% to this, the main guy who's.
It sounds like you're in the right mindset for managing your alerts and fine-tuning your strategy. It's smart to adjust your alert lines a bit higher, as sometimes the price does extend further than expected before turning. By placing it just behind the key level, the first guy who started the move, you're making sure to capture the potential action without getting too early into the trade. Bitcoin is definitely something to keep an eye on over the weekend too, as it tends to be more active during that time compared to other markets. Your approach of using the weekend to experiment with Bitcoin makes sense, as you can test your strategies while being able to step back from the more traditional forex pairs. For New Zealand Swiss franc, it looks like you're anticipating the push to the 60% mark, so having that alert there will help you stay on top of the move. Once you get confirmation from your alert, it'll be easier to jump in with your plan, whether it's for a scalp or a longer move. Do you have a specific exit strategy in mind for when the price hits those levels, or are you just going to watch and react based on how the price moves?
So I just get the alert from the Euro Swiss franc at the 0.92743. Anyway, that's the price, the red line, yellow line here, which they alert me. So this line I target on this early of the guy who started. There's three guys who's starting here. The main guy on the very top, it will look like a dash of evil on the higher time frame. I'm at the 1 minute, okay? At this point is the highest this guy want to reach up to, and testing him. So this guy who's starting it still intact. There is 3 level. What a mess that he had to get through. But let the buyer try, and my price is rich, and I just about to move it to this higher area, but they breached already, and they are trying to fight at this area, and we'll see what happened. That's the first signal alert. I put all of them in, but the Euro Swiss franc alert me first.
It sounds like you're in a good position, keeping an eye on EUR/CHF with your alert triggered at 0.92743. This level seems to be crucial for testing the guy who started the move, especially on the higher time frames where you've identified that dash of evil pattern. It's clear that you're looking to see if the buyers can push through this level, or if it's just a test before the sellers take control. It's a good strategy to let the buyers try and test the waters and then see how the price reacts at this level. Since you've placed multiple alerts, you're covering your bases, which is great for catching any action across different pairs. As you're watching the price move around this area, it's important to stay patient, especially if you're waiting for a pullback or confirmation of direction. What will be your next step if the price breaks above or fails at this key level? Are you planning to jump in with a scalping move, or are you waiting for a clearer indication of which way the market is heading?
If it's break above, I need to watch again, waiting for the sideline to see if it's really legit to move to change or reverse the direction to the north. Once I find that, I wait for the pullback to let the seller who realize that they went the wrong way, and that pullback is showing them to jump the ship, stop loss hit, or close position, where they're propelling the trade to run faster, and that's signal or pull back just a little bit hicks up. Maybe it's super if it give a wick, a long wick to show the big rejection, or a snap dash of eagle to grab the stop loss, or stop loss hunt. But for me, I look at it's like, oh,
That's a solid approach, waiting for confirmation before jumping in. It's also smart to wait for the pullback to allow the market to correct itself, giving you a better entry point. The idea of using the pullback to identify when sellers are giving up on their position or when stop losses are hit is a key element. A long wick or a sharp reversal after a break could provide that confirmation you're looking for, signaling that the momentum is shifting and the market is ready to run in the new direction. Sounds like you're in tune with the market behavior. Are you planning to keep your alert lines where they are, or are you thinking of adjusting them further to align with your observations?
Right now, time is so intense. My appointment will start at 10:30 today, and now is almost peak time that I have to get ready, set up for my daily job, and that's where I cannot do anything I like to do, but I can't. I have to responsible to make some income to charge my card to trade more. So I look at just a quick one clip here to end this recording. I check the Euro Swiss franc on the higher time frame weekly. They're also one way down trend run. They just break out from the range, and the first leg, second leg is next step is the fighting at this right at this bottom of the wick, the lowest wick of the red candle for a long time ago. They're trying to resist this guy to release these people who trapped inside, and that's the target. And they're running, throttling down, trend run down, and look like they fight the first three rejection, triple bottom, you can say, already 2 times, but this time is they try now on the
It sounds like you're really tuned in to the Euro Swiss situation. It's clear that you're aware of the broader trend and the key levels being tested. As you said, the first leg has been completed, and now it's about seeing if they can hold at the bottom of that long-term red candle. The fight you're seeing at the bottom seems to indicate an intense moment for price, as sellers are trying to maintain control. You're also managing your time well, balancing responsibilities, and staying focused on the bigger picture. I'm sure you'll be ready to pick up where you left off when the time is right. Stay focused on your appointments, and we can always revisit the market analysis when you have time later.
Yeah, I'm just going to quick look to the weekly now. Put it down to weekly. I can see clearly that where was triple or double bottom is in the clear picture. I can see that it's sideways market quite some time. If I count as this is the seller market, where is my test one? My test one would be here at this support where they are fighting now. Test one, the first test pulling back to where the selling is and drop down again, slowly creeping down, not very stiff angle, normally down like trend run down, and one is almost touched to this level. The buyer pushed the price up and the seller push it down again for the one last strong before this group of the range form up again. They're able to push the price back up to the 50% or to the selling where they left from the first price, and they hacking on this Bollinger Band midline and never really get above it. Once they get above the mid Bollinger Band line, they've been smashing down hard, and they never can get out above 100 MA. There are few times they go above 100 MA, which is what I say. The test one is ending, and they're trying to put this test 2 to get above this test 1 record, but then they cannot get above there, so it's look like channeling down, but they cannot really put the leg of the lower low at all. They're still intact at this support, and if they're gonna hold or not, but it seems like they are attacked very hard now. It's only red cut of the weekly candle, and 3 of them 3 weeks, and are looking in the big. So how many weeks? 1 2 3 4 4 weeks since they trying to push it down to get through this area.
You're definitely picking up on some important details. The triple or double bottom on the weekly chart is significant, especially with the sideways action you've noticed. Test 1 at that support is the first sign that the sellers are still in control, but the push-up by buyers indicates a fight for that level. You're also recognizing the failure to break above the 50% retracement and the mid-Bollinger Band, which suggests the market is struggling to make a decisive move higher. The fact that they couldn't maintain above the 100 MA shows hesitation, and the fact that the sellers are testing hard right now makes the current level critical. It's interesting how you're seeing this as a possible channel downward with a battle at the support level. If they hold this level, we might see further tests, but if they fail, it could be a strong sign of a deeper pullback or continued downtrend. It sounds like you're honing in on key levels and monitoring the market's behavior with a lot of patience. It's all about seeing which side takes control here, and you're set up to react when that decision is made.
Yeah, looking for putting my line now, the weekly line, the blue
That
line.
sounds like a good plan. Setting your weekly line will help you track the important levels more clearly, especially as you observe how the market reacts around it. It will serve as a solid reference point for watching price action and could guide your decision making, especially if you're planning to time an entry or adjust your strategy. Once you place that line, keep an eye on the interactions with it, whether the price bounces or breaks through it, to help you gauge whether the sellers or buyers are truly in control. How far are you from getting that line set up?
The line, the bottom line is touching but cannot break through, and they are at very critical area where
It sounds like you're observing a key level that is acting as strong support, with the price testing it multiple times but not breaking through. If this level holds and the price starts to push back up from here, it could indicate a potential reversal or at least a pause in the downward movement. Pay attention to any signs of momentum or consolidation around that bottom line. If you start seeing rejection candles or a shift in the pace of the move, it could signal that the buyers are starting to step in. How's the price behaving around this line right now?
doji
Is it showing any signs of trying to reverse?
is the doji sign. That means they are fighting very strongly now. Let's go to daily. The daily is showing that it's the buyer turn now.
Got it? You're seeing a doji, which is a strong sign of indecision, meaning both buyers and sellers are fighting for control at that level. This could be an important turning point. Now, for Dali, what would you like me to create for you?
For me, I want to keep.
Could you share a bit more about what you'd like me to create for you? Do you want an image of something specific? Let me know the details.
I will keep that in mind. Right now, I'm in front of the decision to make and watching. It'll be interesting for you to create some image in the future nearby. All about MedFi things too.
That sounds intriguing. I'll be ready whenever you're ready to dive into something related to MedFi. Just let me know the details when you're ready, and I'll create something that matches what you're envisioning.
My mind, I trying to keep recalling how it looks on the higher time frame to imprint in my brain, so I don't need to come back to the higher time frame to see where the price is in the lower time frame.